Hello, everybody, and we're glad to welcome you here. So, today we're going to talk about the very important theme in scalping, and this is called the risk control. So, at first glance, it seems to be a very difficult, very complicated theme because there are a lot of different information in the internet, a lot of different terms, countings, and other things. However, today we're going to explain you that risk management is kind of easy and very easy to understand, and like every counting in this theme won't take a lot of energy from you. So let's start. Let's see the trading week. And so here is the question. Was this week successful or not? At first glance, a new trader can tell that, of course, this is a very successful week because we had four profitable days and only one day, like Wednesday, we fixed loss $5. However, this is not so very easy because we don't know the size of the deposit. We don't know anything about this trader. And there can be the situation that like two traders can have the same statistics. However, one trader will be professional scalper. However, the second trader will be just a new trader, and this result won't be very good. So let's imagine that we have three traders with the same deposit, same commission per trade, like every aspect is the same. And here we come to our first term, and this is called daily drawdown. So let's imagine that the first trader has his daily drawdown $10 per day. So if he lose $10 during the whole trading week, so the previous week he made 175, now he lost $10. So now he has 165 bucks. So he lost just $10 from his previous week, so from his profit. The second trader has his daily drawdown $100. So let's imagine that he lost $100 per week. So now he has $75. So he still has profit per 2 weeks. However, the last trader has his daily drawdown 1,000 bucks, and let's imagine that he lost 1,000 bucks. So here we see that now he has a loss $825 from his deposit. So he didn't lose this money from his profit, but so he lost his a part, like a very big part of his deposit. So that's how daily drawdown works. And here we come to the difference between the professional trader and between new trader, because every professional trader, when he reach his daily drawdown, he stops trading for this day, for like till the end of the day. However, the amateur trader than just a new trader, they're trying to trade more to compensate this loss. However, on the distance, so if we trade like not 1 day, 2 day, 3 days, if we trade like for a week, for a month, for half of the year or the year, and new traders like trading the tactics like that, we just lose all their deposit. So the daily drawdown is very important term, and you have to count or just take in advance so you just know your daily drawdown. And here we go into the second step. Here we count loss per trade because every day, if you like do a lot of trades, not just one trade, we have to divide our daily drawdown per every trade. For example, our daily loss is $10, so $10 per day. This is our daily drawdown, and we have like 10 trades today. So it's just up to you. If you make 20 trades per day, you can write here like 20 trades. So it's just depends on the number of trades you're doing per day. So we divide $10 in 10 attempts, and we have our loss per trade, and this is $1. So we have $1 loss per trade. So here we also can see the difference between the professional trader and the difference between a new trader and amateur trader, because professional trader, he thinks about his risks. However, the new trader just thinks about his profit. This is very important to understand. After that, we'll try to count our position size according to our stop loss, because when you start every trade, you have to understand where will when you found the entering point, Of course, you know where will your stop loss be located, so what squeeze you can afford yourself, and that's how we count our position size. So we divide our loss per trade on loss per contract and have our position size. For example, if we have loss per trade $2 or 1 in the previous example, we understand we cannot afford to open the trade more than half of the contract. Okay. However, if I put yes here, loss per trade $2, we'll be able to open the trade for like one, maximum for one contract. And I want you to notice that in this scheme, we didn't even counted the deposit size, the leverage that you have. So all these factors you don't have to include in this scheme because it doesn't matter what deposit you have, $1 million or $10. So this scheme is working with every deposit, and this is like the basics of risk controlling. So after you counted all these things, we go into statistics. Statistics, this is like the number of trades. Of course, this is not formed according to 1, 2, or even 10 trades. You have to trade like 1 month or 2 months to gather all these statistics. So here we have success. Success, and this is where our entering points, so our trade are successful, so we made a profit. And loss is where is when we reach our stop loss in a trade. So for example, if one success trade gives us $3, loss trade gives us a loss of $1. So possibility. So here we have like the possibility of the success trade is $3. Oh, it's 35%, and of loss this is 65%. So here we can count our profit or loss per trade. So in every trade, we got $1 here minus $0.7. And with the time, you're making your statistics better and better because you become more experienced trader and see a lot of see more better situations. So you can like change numbers here. For example, we make more profit, so we stay trade longer and make more profit, for example. So if we click here 4, so we have 75% here. This is the 75% of our stop loss we made. So this is quite good. For example, if we change here, change the possibility, like 40%. So here we got even more. And with the time, you make your statistics better and better. What to do next? So you can enlarge your deposit size. So this will be quite logical step. And after that, you analyze your trades with new deposit. You see the result. For example, if the result is not as good as you expected, so you can just stay on this level and try to make your statistics better. Okay, so in the final step here, we'll try to understand what is how to risk without risk. Yeah. For example, we in the morning. So here are 3 periods for trading: morning, day, and evening. The 3 parts of the working day. For example, in the morning, we made just one profitable trade and 3 trades were lost. So the next day we got in the daytime, let's make like 1 and 1, and in the evening we got 3 profitable trades and 1 loss. So what do we have here? Here again, let's just repeat. In the morning, 1 profitable trade, 3 loss, 3 lost trades. During the daytime, 1 profitable, 1 trade with a loss, and in the evening, 3 profitable trade and 1 trade lost. So here we have the final result. So if we have, for example, our daily drawdown is $20. So as you can see here, we were not very successful. We have $11 left. So here the result is quite better than in the morning. however, not as good as the successful trading day. So we enlarged our daily drawdown to $3. And finally, we have three successful trades and one loss. So it means that by the end of the day, we not only saved our daily drawdown, but also got a profit of $5. So let's imagine that the situation was successful for the whole three periods, like okay, like 1 0, two, okay, and 3 1. Here we have a profit of $4. So for example, like this, if we got $4 for a profit trade and $1 loss for not the successful trade. So we got just $10. For example, if our daily drawdown is $10, so we got just on the edge of the limit. Okay. So finally, we got the profit of $25 per trading day. And what is how to risk without risk? Because every new trader, every amateur trader thinks that it's when you like, okay, I'm going all in and just uses the whole deposit with the like very, very big leverage and finally like have a successful result, so profit or with a loss. So this is not working like that. Because a professional trader, what does it mean to risk without risk? For example, if you got one profit trade and four loss trade in the morning, during the day you got four profitable trades and two losses, in the evening 3-1, and you have one trade left, you see that this is a very good trade according to the technical analysis. Yeah, you just found entering points and you're ready to enter. The only thing that you can risk is your drawdown and your profit that you made during this day. So you risk $35. So of course you can just use the whole deposit and just to whether lose it or make profit. However, the professional traders, they just risk their already made profit and daily drawdown, so summary. And this means that, for example, here we add one more, and the result will be a way better rather than you just risk your whole deposit and just lose not only your profit but also your daily drawdown. Okay, so let's just imagine here another situation that we have four successful trades here the same, and finally you can risk all this sum of money to make your personal records for traders are made. So the only thing that you can risk is your, again, yeah, your drawdown with the summary with profit. So guys, let's just repeat all the things fast. So firstly, we count our daily drawdown, so you can count or just take your drawdown as you want according to your deposit. Then we count loss per trade, dividing daily loss to the number of attempts. Then we including all the squeezes, places of stop loss. So your entering points, we count position size that you can afford yourself to enter the trade in a number of contracts. Finally, we form our statistics. So you better form your statistics after 1 or 2 months trading. And the last part is we study how to risk without risk. Okay, so this was everything necessary about risk controlling and scalping. So hope that this information was useful to you. So we wish you a lot of profits. Bye bye.